Danielle and I are both out and about today. I'm in Oswego taking pictures and video for a new listing. And Danielle, where were you?
I had an appraisal in Shorewood.
So every once in a while, we have other people's calendars we have to get on, and we have to squeeze it in. So here we are.
Yes. When an appraiser says, this is the time I'm coming, you do everything to make it happen because they can make and break a deal. So
absolutely.
You can say, sorry, I have a Facebook Live I'm supposed to do. No. Clients first and their interest.
So is the audio okay? I'm coming through my car speakers. It's not like doubling up or anything, is it?
No. I was worried about that as well. I'm doing the same thing. It's a little, I don't want to say echoey because that's not correct either. It's a little, I don't know. It's something different, but it's still clear.
Audience, is the audio okay for you? Works for us. Anyone want to make a comment about whether you can hear us or not? Maybe they can't hear us and that's why they're not commenting.
Yes, that could be it.
They're like, what? What did you say?
Well, I'll say if my mom's watching, she could send me a text message and say, I can't hear you. So, all right. So we're not here to talk about how busy we are. We're here today to talk about insurance and how it influences buyers and sellers. Some of it's a bit informational, a little bit of it is cautionary. So we'll start, which way? Do you want to start with buyers or sellers? Ruth,
let's start with sellers because I think that's really where it starts, right? So
Absolutely.
If a seller has a claim against their homeowner's insurance.
Correct. So that is a question that is not in the contract as of right now, but it is something that I see on, I think, every single attorney review.
Yeah.
So the attorneys, after you get under contract, and we talk about this attorney inspection review period. So 5 days when you have a buyer has an inspection and has an inspector in, and they give a whole list of things, and we've gone over that before. But at the same time, the attorneys are going back and forth, kind of changing and tweaking things that they feel are inaccurate or not thorough enough in our current contracts. So they put different things in there. And one of them that we see on all of them is talk about recent, or has there been any disclosures, but it is something that basically will need to close. So, a lot of people, insurance is there for a reason, obviously. But if something were to happen, and you want to use it, but it also shouldn't be your backup plan to get a whole house.
Yeah.
Or free time,
Now I'm losing you. I'm not sure if that's on my end. I've got all the bars, so I think I'm connected pretty well. So I'm going to talk. I might be talking over you until I see you kind of come back. If, for instance, there's a storm and the building is damaged, mostly that's going to be like definitely roof and maybe siding damage. And the homeowner puts in a claim saying my roof was damaged in a hailstorm. The insurance company is going to investigate that, and they're going to either say yes or no. Whether they say yes or no, there's going to be a record of it. And if they say yes and they give you money, you are supposed to spend that money fixing whatever the storm damaged. So if you get $5,000 for a new roof and you don't get a new roof, and then you go to sell your house, it's not going to go well for you.
Am I back for you at all?
Yes.
Okay. Yes, and it will be part of the claim. And what's going to happen is, again, back on our contract, we have there's a 10-day insurance gap type. I don't know the correct term for it, but basically 10 days in which a buyer needs to get quotes for the house that they're potentially going to buy. And if there are a lot of claims, it's going to be possibly higher for them. Additionally, if there was an insurance claim recently and not a replaced roof or not a fixed siding or whatever the damage might have been, it's going to be very hard for them to get insurance, or it could potentially be hard for them to get insurance for it.
Yes.
At the very least, you're getting called out for taking money and not doing what you need to with your own insurance, which
Correct.
may or may not be a big problem that I cannot totally comment on.
So if you think that you're going to, this happened recently in my neighborhood, obviously not my listing, but years ago we had a hailstorm that came through and everybody's roofs were damaged and most people got them replaced and a few people didn't. Well, one of those who didn't is for sale right now, and that's going to be a big problem. So any buyer who comes in there is going to know that it's a damaged roof and that the seller, essentially took the money for the roof and didn't fix it. So as you said, it's going to be difficult to repair, but it's also going to be a very difficult sale to get through.
And quite honestly, I mean, we keep referencing roofs. There's a lot of other things, siding and internal things that could be also on there. But that is a definite, if I find out about it, it's definitely what goes on the disclosures. The disclosures have to say you are definitely aware of a material defect within your home.
Yeah.
You have to, you got insurance for it. Or a claim for it. So
yeah, and that new buyer will not be able to claim it on their insurance, and they will be required to replace or repair it. So it can often put them in a position where they're not able to buy because the lender requires insurance and may not be insurable. So you could get pretty far down the road with a contract and then find out that the deal can't go through because of a previous insurance claim that was not remedied.
So yeah, that's and I did talk a little bit, I guess we were talking about sellers, but, and I did talk about how it's relevant to an extent for buyers because they do have the 10 days with the insurance to get a quote for it. The other thing I wanted to just kind of, since we're just generally talking about insurance, excuse me, sorry, is I wanted to kind of talk about insurance as far as it goes with the payments, right? So we've talked before about PITI, right? That's principal, which is how much you're buying the house and how much if you allocate it over 30 years, 20 years, however long your loan is. Then the interest, we all know about interest rates being pretty much record lows or near record lows right now, and for probably the last year and a half or so. And then you have taxes. We know about those in Illinois as well. But the last one in all of that, what goes into your monthly payment is your insurance. So insurance is something that you need on your closing. When you're getting ready to close, you will have to pay for an entire year ahead of time. You need to be insured. Your insurance, your lender is going to require you to be insured right away. Before you get into the house, it is insured. The moment you have that signature on all those papers that you sign at the closing table. And the reason we want you to make sure in the first 10 days that you get quotes is to make sure that in the end, you're totally aware of what your payment is going to be and you can still afford it. If there is, hiccups in past claims or, some red flags that make it like flood zones and stuff like that.
I was going to say a flood zone that nobody spotted, those change. So sometimes it didn't exist when they bought it and now it does. And so that requires extra insurance and it can be very pricey. So I've had that happen where that blew a deal. A buyer could no longer afford to buy the property once that flood insurance was added to the monthly payment.
Yes. So that's why we want to get in on it right away to make sure that it gets added. And then you pay a full year, and then you have to make sure you keep up with that. So part of your escrow is going to be insurance, right? I just said your monthly payments. So you're escrowing each month, you're paying for the next year. So
let's just define that a little bit clearer. Each month, your bank is going to collect money that goes toward that PITI. So they're going to collect a certain amount of money. Some of that's going to go toward the principal, like $5 in the beginning, but that gets bigger. Some of it's going to go toward the interest. Those two, those two balance, there's a point where they pass one another, and more of your monthly payment doesn't change in most loans, but more of it goes toward principal and less of it goes toward interest as your loan ages. Then
in one direction. And then the final thing is the insurance. So they're going to collect money every month for the insurance, and then they're going to pay it whenever it's due.
Correct.
You might want to check on that now and then to make sure they do.
Yes, I was going to say, occasionally you'll get something in the mail from your insurance company that will say, or the lender, I'm sorry, not the lender, the mortgage company, basically saying, hey, it looks like, your insurance went up, or we didn't escrow enough, or whatever. And sometimes you have to make a payment. Sometimes maybe there's an occasion where you might get a check back. Oh no, I think I'm by myself. So I'm going to keep going. Sorry, Ruth. I am, so you might get a check back. But you have to keep the insurance. Because what will happen is, one of the things that you need to know is that if you are not voluntarily having your own insurance company that you've picked out and gotten the quote for and agree with the coverage, your insurance company will, because they want their asset covered, and it is not cheap.
You mean the lender will?
So, I'm sorry, what did I just say?
The insurance company will.
I'm sorry, the lender, the mortgage company wants to have I'm glad you came back. They want to have their asset covered, and so they will buy it for you. And it is not at your rate. It's probably 30, 40, 50% more, because they don't care. They just need insurance. And guess who gets the bill? So you are more than welcome to, every couple of years, and I highly recommend, that you price it out and see what's the going rate amongst other insurance companies, just to make sure that you're getting a good rate and make sure it's apples to apples. But also,
Danielle and I have we've got some great insurance people that we can recommend. So always feel free to.
New cards in the mail today.
Awesome.
Yeah.
To reach out to us for our recommendations. And our trusted lenders also have great insurance people that they work with and recommend. So we've got you covered.
So, yeah.
All right.
So we want you to understand the importance of insurance, the good and the bad, and how that kind of affects the buying process, and why we have people in our pockets, well, not pockets, but people on our team that we refer to, because it's all got our thumb on them.
We need to clarify that that one more time. Nobody is
Yeah,
ever
right.
allowed to pay us to refer them to our clients. The only people we ever refer are the people who do a great job both for us and for our clients. So that is
Yes.
the criteria we use. If they are honest, have a high level of integrity, that's really important to us. Obviously, their rates, need to be competitive, but we really want to make sure that you get good coverage with a good person who's going to represent you well.
Absolutely.
So I think that wraps it up. I need to head in for pictures, watch for my new listing, and if you have any other questions about this, drop a comment, and we will be sure to respond. Thanks for tuning in.
Have a great week.
See you next week.